Hi guys, Harry Yotis here. I've been trading these markets professionally for the past 20 years. Started way back in 2005, and for the past 10 years I've been trading my own account. So, let's get started for today. This is a picture of the S&P 500. This small little candle here is Tuesday, the 30th of December. Very light holiday end of year trading going on, very thin. Not much happened today. We did get that big news of the day is the silver did rebound. It didn't crash like everybody was scared of yesterday. And we also had some macro coming down the pipe. So first, let's talk about the technical picture of the S&P 500. We broke the new highs on Friday the 26th, but then we're coming back down on very thin holiday trading for this week. So the technicals are still bullish. We're going to bring back our moving averages. Again, we keep saying the same thing. Nothing has changed. We're above an upward sloping 50-day moving average here in red, which is above the 200 in blue here. Nothing really to worry about. The technical picture is bullish. Okay, nothing has changed, and I don't suspect it. I don't suspect it will change in the coming weeks. Okay, so we are bullish and we're continuing to hold our long positions. Okay, the sentiment analysis, which is always paired with our technical, is still neutral. Yesterday it fell to neutral, and today it's still neutral. All the sub indices show neutrality, while the put-call ratio is still at extreme fear. This means that a lot of people are still buying puts, which is good for our bullish thesis, okay? Because it is a contrarian indicator. And I suspect the reason they are buying puts is that, they are pretty cheap. Because as you can see here, the VIX is at lows, 14, 15, okay? It can stay at lows for a long time. You're going to get some brief blips going up, but it's at lows. So we should be wary. This is a cautious market, okay? Even though we are bullish, sentiment is neutral, we should still be very wary, okay? So we had a number of things. Before we get to the silver rebound, we had some macro coming out today, and that was Powell. Fed minutes show officials were in tight split over the December rate cut. This just means that basically nothing new. We're debating about whether we should cut. If you look at the Fed Watch tool, which predicts rate cuts or rate hikes, but we're in a rate cutting cycle right now, it predicts the odds of a rate cut going forward. January 26th meeting, there's an 85% chance that we will stay at the 3.5% range, which is no cut. Okay, but this is known for a long time. In December, we knew that the first rate cut might come in March. It's like 50-50. This is the rate cut. This is standing pat. So not really 45%, but by April, which is in 3 months, 4 months from now, slight chance, 46% chance that we get a rate cut. So the odds really didn't change. It was, I think, March or April that we're going to get a cut. So it's really not going to affect the markets that much. It's really saying that the economy is pretty strong because nothing, the jobs are still holding up. So the macro news is, I would put it into the category of no change, nothing different. These Fed minutes really didn't change the market at all. Okay, so let's go and talk about the silver rebound today. Everybody was really, really scared about the silver smash yesterday on Monday. It was sort of expected. Bang, rebounded today, okay? This is like very thin market trading. It looks like a lot, but it's like not a lot of volume. I would say it's a lot of volume on the silver market, but it's very thin. So you're going to have a lot of movement up and down because a lot of players are not willing to step in. However, the fundamentals are still telling us that there's somebody caught short in this market. They need to cover, and we don't know where this settles. I'm still hoping it'll eventually go down to the $65 range and settle because, right now we're still, even though yesterday's plunge brought it into not overbought, we're getting into this overbought level. It doesn't mean anything. We can be overbought for a long time. And the price, we were overbought since, let's say, all of December when the price was at 57 and went to 80. So it doesn't really mean much. But I would like for it to like go back down and sort of cool off a bit. We don't know what happens. And even with all the other metals, yesterday we had this gold plunge. I suspect it's because they had to sell, whoever was in trouble had to sell some assets, i.e. anything, to raise margin because they got a margin call. So they had to raise their cash, not margin. They had to raise cash by selling anything with a bid, and gold fits the bid. So I guess they sold their gold to raise cash. And like as you can see, the rebound in gold is not as dramatic as the rebound in silver. Yet I still think it's bullish. I still like this gold setup going forward because the underlying fundamentals have not changed for gold either. And as we saw for copper, same story. Copper futures yesterday hit and now back up. As you can see, we weren't overbought. So plenty of room to go up. I'm still bullish copper. I'm still bullish silver. And I'm still bullish gold. I'm bullish all the metals going forward, okay? So I just don't know where it settles. We might get a lot of choppiness going forward in silver. No idea. The point is, it doesn't really matter. As long as it stays at a healthy level, even above anything above $50 in silver, the silver miners will do very, very well. Okay, so I'd like to finish off today by talking about our singles trades. If you recall, in the beginning of December, we were long and the market was going up, and we decided that we were already long, so we didn't want to take big bets going into December, so we decided to take singles trades. What I mean by singles trades, it's trades that we thought we were going to hold for, 2, 3, 4, 5 days a week, whatever the case may be, short-term trades that we don't anticipate making, 100%, 200, like 2x, 3x, 4x our money, as you do with being long options, call options, or call option spreads. So we decided to enter some singles trades by selling premium when it was relatively high. And we did this with Microsoft. Okay, we did it in Microsoft when it hit this level right here, the 467, because key level going all the way back to July of 2024. So we got long here by selling put structures here. We sold premium, okay? And here the premiums were elevated because as the market was going down, the VIX was going up, and here we had a good sell on our put spread. We got rid of it here, but we re-entered it again, and we suspected not a good price as this one, but still a good risk reward. And today, because of the sideways action, we covered. Okay, we had a bid in and we covered. So now we are out of our Microsoft singles trade. Okay, so we had 2 singles trades in Microsoft. Oh, and by the way, we got out of it and realized 75% of the total profit potential in that put spread. So this single was great. We mentioned also that we got out of Tesla when it plunged here, but here we realized also 75% of the gain because we entered it around here, popped up, popped down. Didn't really matter because we had time decay in our favor. So we also made 75% return. We also, at our last trade right now, is in CrowdStrike. We entered 2, we entered 1 around here. We got out of it, and we entered it again. And this around this plunge. Okay, so we had a couple of days here. Well, when did we enter here? Around mid-December. It's the end of December. It's getting close to our price, our target, our take profit price, not the price of our options spread. So we anticipate getting rid of the CrowdStrike trade very soon, maybe in the beginning of January. Okay, so to reiterate, our singles trades that were supposed to go in and out very quickly and realize the decay in the option price because we were selling premium. 100% success rate so far on them, and I hope to be successful on the CrowdStrike one as well. And we will not be doing this going forward anymore because, as you can see, the VIX is very, very low. I don't want to be selling premium when the VIX is this low. Maybe enter some long type of trades if you long options type of trades. And as usual, we always have shorts going on the SPY. We do this via some option structures that are a little bit complicated, but you would always want to have shorts in your account. Okay, you're not just long only. We have shorts that will take advantage of a potential market drop. Okay, it's tough to time, but you want to be balanced. You don't want to be on one side of the trade. Okay, so that's it. Let's reiterate. SPY, we are bullish. The technicals are bullish. The sentiment is still neutral. I suspect we go higher. Maybe we can drop even lower before going higher. That would be nice. But I suspect the overall trend will be going up into the new year. The macro, Fed minutes absolutely had no effect on the rate cuts or lack thereof going forward, but it doesn't matter. That's not what's going to drive the market. Okay. And of course, our singles trade today, we got out of Microsoft as it was consolidating here. The delta decay, the theta decay allowed us to get out of our option here at a 75% of the total potential profit realized. We also closed Tesla a while back, and the only one that we are holding right now is CrowdStrike. Okay, any pop here, we're probably going to get out. Any slight pop, it's not only going to go in our favor, but it's going to the theta decay is also going to go in our favor. So we're going to have a double whammy profit potential. Not profit potential, but a double whammy, two ways of realizing our profit. Okay, so that's it, guys. Again, holiday almost over. 2025 has been a good year. Let's see what happens in 2026, or the shortened last day of the year tomorrow. Of course, if you like what you saw, like and subscribe and give me a comment. I will answer it as quickly as I can. So that's it, guys, and take care.